We're back for another trading recap for Thursday, December 5, 2024. It's a few minutes after 8 a.m. Eastern currently. I'm Sam, and I trade the E-mini futures. Right now, we have a market, at least the SPY, that is at all-time highs again. This means we're kind of limited in how we determine levels of potential support and resistance for today, but I have a few. Under normal conditions, price should react at these levels if they are hit and help us trade the E-mini futures. The level at 607.66 in the light blue line is simply an area that price has not been able to get above in the pre-market. They pulled away from this level several times early after the closing bell yesterday. At least on one time frame that I look at, there is a signal for a possible interim pullback. It's a short time frame, so I don't think that signal has a lot of weight, but it wouldn't be too surprising for the SPY to pull down at least early in the regular session. If price gets above 608.14 and we get hourly closes above that level, the bulls are still in charge. They're still in charge now, of course, nothing bearish about anything in the SPY, but it's good to be aware that when they reach their destination, which could be from where they are now to any of the levels higher up, even if it's not a level that I was able to locate for this morning, when they get to wherever that is, there's always a possibility that a pullback from that area could be sharp, something to be aware of when price gets extended like this. After the closing bell, we'll revisit this same chart and talk about any trades taken during the day based on these levels. Catch you on the other side. So did we nail the top? We did for today at least. So where were the trades? If you were willing to use the level at 607.66 to go short right at the 15-minute mark, right after the 9:45 candle closed, you would have needed to add to your position when they got up to this next level and hit it 608.14. If you were specific, if you were technical about it, you would have sold at 608.09 with the 5-cent buffer. That is exactly what the rules prescribe in scenarios like this. The real overhead resistance was up here. Like I mentioned this morning, this level at 607.66 was just an area that the overnight traders could not get priced above. It had no other reasons with math behind it to be a good level. That's why I made it a lighter blue color to distinguish it. But I had it on the board this morning, and what we do is treat every level the same way each day. This is for the purposes of keeping the playing by the rules tracking log accurate and meaningful. I am aware that there are those of you out there who have been using these daily levels to trade with or trade against during the day, and you're doing all this without knowing the nuances of the rules I keep talking about. So I need to be sure that the levels that I share each morning with everyone on my list are ones that I feel really good about. This morning, though, I just liked this higher level better, the one at 608.14, and the one trade I took was up here, short position. In other words, I ignored 607.66, but this is a process. So what we're saying is you went short at 607.66, then added to that short position when price went up to 608.14. The reason is they did not give you a base hit of 4 points, no fumble signal, nor any other reason to bail out of this trade when it was out of the money. So if you sold 2 contracts here, you'd be willing to sell 2 more up there. So your short position of 4 contracts would have given you a nice base hit of at least 4 points as they came back down. That was the design. As long as you were short of those levels, you were playing by the rules and you would have been rewarded with more than a handful of points. I did surmise this morning that they probably would come down during the first part of the open session. I think my exact words were, it wouldn't be too surprising for the SPY to pull down at least early in the regular session. What I expected to see later, though, was the price to get above 608.14 and for the bulls to try to close some candles above that and establish more dominance and then go higher. They didn't. That kind of has me wondering if they'll pull back maybe more before they rebound, or was this the start of a rollover? It doesn't look that way on the daily chart, which we'll look at shortly, but I have some important trend lines above current price, above 609.70 actually, and that should kind of attract price, and that area up there would be better overhead resistance in the big picture. But the market rarely does exactly what you want it to do, but a prediction rate of over 80% works well enough for me. Let's look at the trade that I took up at 608.14. I'll let this play for a few seconds so you can see how I ignored 607.66. And then later I put an order in the system to sell 2 E-mini contracts the moment the SPY hit 608.09. I did pull it down 5 points with that 5-point buffer. And I pulled 4 points fairly quickly once they got up there. Like I said, I didn't really think there was a whole lot going for the 607.66 level. What I wanted them to do is come all the way down to 605.50. I was ready to go long with several contracts, 3 or 4 contracts there if everything was behaving the way it was supposed to. That would have been a great area for support, at least early in the morning, but they didn't do that. They came up short. So that what you just saw was just the 4 points, and later I'll just scrub ahead here. Looking forward for them to come down to 605.66. Had an order in the system. You can see my fumble threshold and profit objective levels there just for reference. Didn't do anything, came back up. I just didn't mess around with anything else and closed up shop around noon, I believe it was. So this recording stops right about noon. And that's pretty much just the one trade for me, was that first base hit in the morning. This is what the spiders look like after today's close. I'll go down in time frames just to point out that they're still bullish in the big picture. You can see we're on a 4-hour chart. This is a 3-hour. I'll keep going down. It's not until you get to the 30-minute chart, I believe, right here, that they're starting to give up the 50-period moving average. No, not even there. 30 minutes good. The 15, which doesn't really mean a whole lot. Not until we see the majority of these larger time frames pulling back and getting below certain moving averages and other things, then we can reevaluate the big picture. I'm not making any predictions, but I'll mention again that there are some areas like 40 or 50 points above current price that could be a target. Not saying they'll get there, but it is an important area. That's all I'll say for now. Here are the logs. Play in by the rules log. You can see the 2 base hits, which is 8 points, by averaging in across those 2 levels. And then my trades over here at the Sam's Trades output, Sam's Trades log, was just the 1 base hit of 4 points. And you can pause or whatever you want to do to look at where this puts the log in the big picture in terms of profit potentials and averages and everything else. So that's a wrap for today. Thanks for watching. Be back tomorrow morning with new levels. Do this again, and hopefully we'll keep this streak going. Whether they continue to go higher or they pull back, we'll be prepared with levels for any scenario. Talk to you tomorrow. Have a great rest of your day.